Hey guys, welcome back to the channel. In today's video, we'll be doing a breakdown of my monthly income for the month of June. Now, if you're new to the channel, I make all my monthly income from option selling, the vast majority of that coming from selling cash secured puts. Now, before I actually break down my income for the month, let's actually make sure we all understand what selling a cash secured put really means. Selling cash secured puts means that I'm giving someone the right to sell me their stock at a certain price for a certain amount of time. Now, the reason I would do this is because the purchaser of that option is going to pay me money. As an option seller, I'm trying to get as much of that money or premium as I can. But like I mentioned before, this person that buys the put only does so for a set amount of time, meaning that unless the stock goes down below the price that me and the other person agreed to by a certain time, I get to keep the money and never end up buying the shares from that person, which is kind of ideal for me. This type of strategy would make me a neutral to bullish investor overall, meaning that the stock could basically stay the same, maybe even drop a little bit, or even go up, and I still make money on this trade. This also means that in the worst case scenario for this type of strategy would be me being forced to buy those shares of the company at a lower price than they are currently. And in the end, I still keep that money that the option buyer paid me up front. So again, for the risk I'm taking, I'm getting paid a set amount of money. And no matter what happens, that money is mine. Now, to simplify this even further, you can really think of this as people buying insurance on their stock, and I'm taking the role as the insurance salesman. These people who are buying put options are saying, man, I'm afraid that the stock is going to go down. I'm going to buy the right to sell my shares at a lower price to protect myself if it goes down. Now, me on the other side as an option seller, I'm saying I'm willing to buy those shares from you at that lower price. And like anything in this world, insurance is going to cost them money. And I'm selling them that insurance. And I'm trying to gather as much of it as I can consistently, knowing that eventually, yes, I am going to have to pay out some claims. But in the aggregate, I'm making money on this type of strategy. Now, we won't go crazy deep into selling options in today's video, but the amount you get paid is really going to depend on the volatility of the underlying company. Think of it like the insurance being more expensive on a house in a flood zone due to the increased possibility of that house actually being flooded at some point. It's a very similar concept with options. Many option sellers will tend to do this type of strategy on more volatile stocks due to the juicier premiums. They're getting paid more money for the risk that they're taking. Now, as option sellers, we're generally trying to get paid as much as we possibly can, meaning that if we sell options against more volatile stocks, we get more money for doing that. However, this also means that you're probably not going to be selling premium against value plays, but instead on what the market would consider high growth companies with sometimes outlandish growth multiples. I tend to mix it up a bit in my portfolio, selling against volatile stocks like Tesla, Coinbase, or Palantir, while also selling on less volatile companies like Intel, Big Lots, or Viacom, which I feel could actually be long-term value plays in the future. Generally speaking, I never really want to get assigned the stock and would prefer just to generate the income every month. And originally I started this account with the goal of pulling in about $2,500 a month in income. But since then I bumped this goal up quite a bit, instead trying to generate about 2 to 2.5% of my overall portfolio value each month. Now, this is most definitely not a conservative target, but one I'm generally comfortable with. Overall, I'm comfortable with the overall notional risk in the event that all those options I sold actually end up getting assigned. Again, the point of this strategy is to pull in consistent income, with the worst case scenario being forced to buy the stock at discounted prices from its current price. The time that this strategy is going to hurt you is when your overall portfolio sells off 50%. In that event, you agreed to buy Apple at 100 and now Apple's trading at 50. You agreed to buy Netflix at 400 and now Netflix is trading at 300. Those are the times at which this type of trading strategy is going to hurt you. But if you're comfortable holding for the long run, you can potentially recoup all of those potential losses and make some money. Now, enough of the preamble, let's go ahead and jump into my returns for the month of June. First off, just looking at the graph for my actual portfolio for the month of June, you can see that I started the first of the month with an account value of $164,253.39. I ended the month at $175,476.81. This was a total gain of $11,223, or a 6.8% return for the month. Now, that was definitely a huge month for me, but not all of that was from option selling. A good portion of it did come from option selling, but some of it was from long-term holds that have just appreciated in value over the month. Now, taking a look at this page, you are going to see that I had $11,486 in realized gains for the month of June. And if we subtract out all the gains from stock like Amazon, Royal Caribbean, and Square, that leaves us with a total of $8,867 in income for the month of June. This was a roughly 5.3% return and will definitely be an outlier for the entire year. Again, I'm really just trying to hit that 2 to 2.5% range. For me, if I'm getting a 5.5% return consistently selling options, that means that I'm taking on way too much risk. Personally, that 2 to 2.5% target that I'm aiming for, I'm comfortable with that. Now, of course, that still means I'm taking on some risk, but I'm not trying to get some crazy outsized returns, which is definitely going to lead to my portfolio eventually being blown up just because of a market correction. Now, we'll talk about it here in a minute, but the reason for the greater return this month was mainly from rolling losing trades from the previous month, which ended up paying off this month. So the additional $2,000 to $2,500 that I made this month really should have been realized in the month of May, but I had to put them off till this month. Now, like I already mentioned, the monthly income for the month of June was just shy of $9,000. This comes out to being $295.56 a day. And I likely won't see these types of returns regularly until my account is about $290,000 in value. But I'm definitely happy with how this played out for this month, and hopefully we still see some continued growth going forward. Now let's go ahead and actually jump into my trades for the month of June. Just quickly scrolling through this list, you can see there were quite a few, but I'm gonna go ahead and start with some of my largest wins for the month. Up here at the top, you can see I sold a few puts against AMD and I pulled in $369.68. Those options are spread across the $75 strikes and the $73 strikes. Next up, we had CCIV, and I pulled in a total of $693.86. This is one of the stocks that I was telling you about earlier where I was actually having a loss on it back in the month of May, and I ended up rolling them out to June and actually rolling them down a few bucks and pulling in even more money. And luckily, CCIV pushed back up and I was able to close them out in the month of June for a profit. And I had a similar situation happen to me on Chewy as well, CHWY, and I made a total of $1,159.82 for this month. But again, it was a similar situation to the last stock we were looking at. I was actually getting tested on Chewy, I was losing some money, so I ended up rolling them down to a lower strike price, putting the probabilities back in my favor, pulling in some additional premium, so I actually pulled in some more money for it, and I rolled it out a couple weeks in time to give myself some more time for Chewy to go back up. The next one we had on the list there was one of those volatile stocks I was talking about before, Coin or Coinbase. Only been around for a couple months, and I pulled in $1,080.41 in premium on that guy. The next one up was Micron or MU. I pulled in $747.28 in income for the month. Next we had Rocket, which was probably one of my worst trades for the month of May. That company had the largest realized losses. I think I was down about $1,200 in the month of May, and I ended up rolling that out and I made back all of it. You can see there I made $1,115.70, and that was from an unsuccessful trade being turned into a successful trade. I just rolled it down and out and pulled in some additional premium, and luckily Rocket came back up and I pulled in that $1,100 in premium. Now, by far my largest position in the account, or my largest income for the month, came from Tesla, TSLA. I pulled in $1,875.87. Now, the two options I sold against Tesla were the 555 puts and the 585 puts, which if you're staying up to date with Tesla's current price, that's about $100 below Tesla's current price. Now, even at those levels, Tesla is probably still overvalued if you're looking at it from a value perspective. But I have no worries that if Tesla were to sell off, I would have no problems rolling that strike down considerably further and out and pulling in some more premium to offset any of that downward momentum. And it's also a company that I really like. I don't know if I could look at it from a value perspective and say that things make complete sense with the current valuation, but it's still a company that I really like. Now, moving on from that, you can see that the remainder was split amongst several other companies. I had Apple, and I made $240.82 off of those guys. I also had Airbnb there, made $104.94. Also had ATV or Activision, made $176.36. Big C with a small $79.94 in profit. Next up, we had Disney, DIS. Now, there was actually quite a bit of notional risk. I sold a few puts, but you can see I only pulled in $279.82. And that's because of the low volatility I was mentioning earlier in the video. More volatile underlyings are going to pay me a lot more money than less volatile underlyings. And Disney is definitely one of those companies with very, very low volatility, so I'm not getting paid much for the risk that I'm actually taking. But it's a company that I really like for the long run. Again, it still might be a little bit frothy in the price, but I believe in its long-term growth, so I'm definitely comfortable owning the stock at $155 a share. Now, the next one on the list there was one of the high volatility underlyings was Palantir, PLTR. I made $399.16. I also had SoFi, where I made $97.94. Viacom with $271.72. And lastly, Vizio or VZIO with $69.94 in income. Now, looking at that list there, this was also an incredible month with a 100% win rate, but that was entirely luck of the draw and by no means an expectation for the future. I will take losses in the account, there's no question about it, but in aggregate, it'll begin to average out. I'm typically selling 70% probability options, so I'll definitely be posting a few losses every month, but I'm generally rolling those options down and out for a profit. It might take me some time, but even in the event that I do get assigned the stock, as long as I don't mind holding it and I believe in its growth for the long run, I don't plan to truly realize any losses outside of some extreme situation with the company. Now that will happen. There'll be a time that I'm selling puts against a company and that company could very well go bankrupt, and that's the risk that I'm taking. But it's also a risk that I'm very comfortable with. But that's pretty much it. That's my recap for the month of June. It was an amazing one, and I'm incredibly happy with that nearly $9,000 return in a single month. When I first started selling options, I never thought something like this was possible for me. And I hope I at least enlightened a few people out there with the potential of option selling. And I hope a few of you guys out there end up doing some more research into it and incorporating it in some way into your portfolio. I know I went through this video very quickly, but if this is something you guys are really interested in, please do as much research as possible before trying to implement this in your own account. Also, keep in mind that if you're trying to get the same dollar figure, that $9,000 result in a $10,000 account, you're taking on way too much risk. Sure, it's possible, but you're more likely to blow up your account than get rich. Really, you need to be mindful of your risk management at all times and set realistic expectations for yourself. But again, I hope this video helped at least one person out there, and if you did find this video helpful, please leave it a like. And if you'd like to stay up to date with my future videos, consider subscribing to the channel. As always, if you guys do have any questions, please leave them down below in the comments, and I'll do my best to answer them as best I can. Now let's all try to make some money this week, and I'll catch you guys all in the next video.